Hello from Chicago, traders. It's 8:02 a.m. Chicago time on Tuesday, the 6th of October, 2020. Working our way through the month of October here. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Just let me know if my mic is too loud or too low. This morning, what are what's the risk allocation here on this episode, number 1852? Markets once again allocating to risk after the gap up yesterday. Crude oil leading again. DAX is up 117 points or 0.9%. The Euro Stoxx up 25 points or 0.8%. The Russell leads for the moment, and then the Dow Jones is up 140 points. The S&P up only 6.25 points. The S&P has breached the 3,400 overnight, pushed to 3,403. If you recall, 3,404 was the big target, and the next key test area above 3340 and 3360. And we just hit that just moments ago, really just about a half hour ago. And that's where we stand this morning. The allocation is clearly to risk. The U.S. Treasury bonds are lower by 22 ticks. The pound is lower. The Nasdaq's taken a bit of a hit. I posted it on Twitter yesterday, and of course, if you're in the Convergent community, if you're a member, you might have seen a notice from me at about 6:12 p.m. Chicago time, or 7:12, with the news event stating that the Republican House panel is proposing a breakup of the tech giants, and the Nasdaq dropped about 60 or so points, a little over 60 points, and has not recovered since. Now there's some. I saw a few things that Google, Facebook, Twitter are heading to Capitol Hill today. I'm not sure if that's still the case, but this puts the Fangman stocks at risk here. But given the political environment, given the election coming in about a month, and how late this is in the game, I would say that this is political posturing more than really actionable investigation by Congress. So as a result, the Nasdaq is the third weakest product I'm watching today, down 0.14%, while the others have led higher. The Nasdaq completely sideways. In terms of what's on the calendar, let's take a look at the overall picture. The POTUS has returned to the White House. There was a whole thing about that, and also we have, as I said, the U.S. House's antitrust report hints at a breakup of big tech firms. And then the EU is reviewing Pfizer BioNTech COVID-19 vaccine in real time. Pfizer and BioNTech are way ahead in terms of getting results for their vaccine for COVID-19. And that's where we stand. So what's on deck in terms of the calendar today? We got very strong factory orders out of Germany. That's reflected in the DAX. Came in at 4.5% versus 2.3%. The construction PMI out of the Eurozone was weaker at 47.5 versus 49.8. The PMI figures were generally weaker. Construction PMI figures were generally weaker. And then balance of trade for the U.S. came in at 67.10, worse than the 66.5 expected. And what's remaining is ECB's Lagarde is speaking currently. We do get the JOLTS job openings at 10 a.m. Eastern time. And then we have Fed Chair Powell speaking at 10:40 today. I'm not sure what that's all about. I haven't dug into it. And then we have ECB's Lane at 11:30, Fed's Harker at 12, The API crude oil stock change at 4:30 and Fed's Kaplan at 6. And that's where things stand currently. Looking at what was expected yesterday versus what we got, yesterday definitely was off on the expectations. It did look like we were getting scenario two, a push right off the open, squeeze um, squeeze into that 75 area, then fall off and back into the range. That didn't happen. The secondary was for it to pull back and then push towards that 75 area, potentially 80. That didn't happen. Scenario three was an open test down, drive up, consolidate, and push to 400 or 404 with a break at the 87. I didn't post that. But yesterday's expectations were way off, and as a result, I didn't really take advantage of the push off the open. Here's what actually happened yesterday on a 1 tick by 8 point and figure, represented in the form of a bar chart. The opening print is the low print of the day. That's driving behavior. Immediately sets off a caution flag for shorts. When we see that, we do not want to get short or get short exposure for a long period of time. We pushed right into the 72.25. We put in an opening swing here, which tagged the Thursday point of control, bringing us back to where we were Thursday before Friday's drop on the COVID-19 infection of the POTUS and FLOTUS. And then we finally pushed through the 75, which was pretty decent resistance last Thursday. And then the market just grinds its way up. We pull right back to that 75 again and push into 3,400. And then the overnight session got to 33.99 and a quarter for a while, and it just ripped up to 34.03. Two distributions, the point of controls in the middle, and really a very clear trend-ish day. Trend days don't generally create that big a point of control in the middle, but today gives us very, very clear lines to work with. Right here at the 89, and then it gives us the point of control at 84, and then up above we have the 97 area as the next key area to gauge for a response. Currently trading at 3,400, 3,400 and a quarter. So that was yesterday. Delta was with us. Delta was positive all day long. It was in favor of the buyers, and it remained this way throughout the session. Here's what's happened since. 223,000 contracts have traded. We have a relatively balanced profile with, it's really just a box profile, very, very balanced, and the point of controls at 33.93, currently trading at 3,450. And once it spiked through to 34.03, we really saw some selling come in following that, but really, all in all, it's just it's holding against those highs. Yesterday's high, the expectation is it's likely to continue to push higher, and of course, we have the 34, I believe 0375 is the actual number above right here, this stock zone right here, and in line with it is some liquidity that I'll show you on Bookmap, but I'm expecting this market to make an attempt to hold this 3,400 area and likely rotate back down into bounds from yesterday and take a breather. A trend day generally doesn't follow a trend day, so I'm not banking on longs being very, very strong, although the market has overall made a good strong turn towards the long side, as I discussed at length yesterday. First, by breaking the weekly one-time framing right here. This is a reversal. Let's put those bands up. Takes a minute. There are the weekly bands, okay, the boxes, and you can see the one-time framing up has ended with the all-time high not too far away now. And then on top of that, we basically are putting in a higher low, and we pushed last week's high, which was at 87.50. And we are well on our way into this area. Now look at what's going on in the composite here. The composite, look at this volume. Look at where we're coming from, where it's nice, clear, high volume areas, and moving into a really rinky-dink kind of thin area, with the last frontier being right here at 34.03. Okay? And so as we clear 34.03, we really are pretty much clear to 94, 34.94 up here is the next key balance area. And then from there, it's all-time highs again, just in time for the election, right? So that's how things are shaping up. Very bullish candle yesterday. The open is at the low. The close is near the high, is right off the high. Not much of a pullback there, with a pretty strong delta. And that's how the big picture looks. The next key targets up are 14, 19 and a half, and then we move into 37, I believe, and then from there it's 34.94. Okay? So rally mode, which means lower ranges, likely lower ranges and lower volatility. Here's what we've got in terms of the order flow. In fact, I want to show you this. I'm going to show you the footprint on that. You should be seeing the footprint here next to my NASDAQ chart. Look at how this printed. We went to 33.99 and a quarter early on. We pulled back, okay, and then once we turned around, look at the prints here. It's printing really well on the offer. It's printing really well on the offer. So good lifting, and then on the bid, really poor, massive imbalance there, zeros and so forth. This is a stop. This is a clear stop run right into the stock zone, and now it is pretty much resting. It's pretty much resting right up against that high, and it's not really walking away. We would expect a quick stop run, consolidate, and attempt to continue, and then reverse, and then come back to where volume is, which is down here, and it's not doing that. Really good prints on the push up, and then since then it is really remaining bullish. You could see positive delta bars throughout. This is, to me, this just says that we're likely to continue to see buying remain strong. Let me turn off my okay, so here's Bookmap. There's the push into the size of the 3400, and there are the stops from it. So you can see that quite a bit lifted there, and we are just sitting here, which makes this a weakish high. And it's really not kind of stepping off or stepping away. Yesterday's high is at 3400 right here, and then above there is this 3404 area. So I'm expecting a test of this 3404. There's some liquidity up here at 3405, the next strike. And then above there we're at 3413. Really expecting today to be more of a grind type day, unless there is news that takes place. Okay, so let's move into what's expected for today. Here we go. This computer, this laptop again, grinding away. Okay, here we go. So this morning, given the conditions that we're under, given where we are, given the volume, given the shape of the profile, given that we've taken out this 75 area, we have additional support in the 50 area down here. To me, this looks like a response is most likely. The overnight inventory is mixed. I'm looking, it's mixed to more short inventory. I'm looking for it to pull back down and test lower, potentially down into this 33.89.90 area before we see another push higher. Expecting today to be a resting day. I'm looking for 34.05 to be taken out, for the market to consolidate into 13 and come back towards 3,400 from above. So that's scenario one. I'm expecting the market to be relatively balanced with an upward skew. The surprise today is likely to be scenario two, where we open, we push the overnight high, sit still for a bit, and then we get sellers coming in as we bank profits above 3,400, come back into the range and drop right back into yesterday's point of control, leaving us with a higher low, higher high, and potentially an inline point of control. Pay attention today to what Powell says to Congress, I guess, or whomever. I don't know who he's talking to be honest with you. I know that he's speaking at 9:40 Central, 10:40 Eastern. Pay attention to that. And then we'll see where that takes us. We're not opening in a gap. We're opening in the edge of the range. And because we have these multiple distributions from yesterday, we have clear risk-reward plays from the profile. These are clear risk-reward setups. If we don't hold the 90, then the point of control becomes our next target and our next test area, and so on and so forth. Okay? Good luck, and I'll catch you tomorrow. Take care.